Christine Lagarde, president of the European Central Bank, just issued a brutal warning to the world.
Financial markets do not understand what they're in for.
She wasn't talking about a normal slowdown. She was talking about the Iran war, and one critical resource most investors have completely overlooked: helium. Helium is not just for party balloons. It is essential for MRI machines in hospitals and for cooling the extreme temperatures needed to manufacture advanced computer chips. Today, helium supplies moving through the Strait of Hormuz are under severe pressure. Qatar, the world's largest helium exporter, has seen its supply line effectively cut off. Qatar's North Field is one of the richest natural gas reservoirs on Earth. Helium is extracted as a byproduct of LNG production. Qatar supplies roughly 30 to 40% of the world's helium. Almost all of it must pass through the Strait of Hormuz to reach global markets. With tanker attacks, mine threats, and the strait now openly called a weapon by Iran's supreme leader, helium exports have been severely disrupted. Chipmakers and medical facilities around the world only have a few months of inventory left. This is not a minor shortage. It's a strategic choke point in the global tech and healthcare supply chain.
Lagarde didn't mince words.
She pointed out that the Iran war is already causing surging oil prices, Brent above $110 and climbing, fresh inflationary pressure from energy costs, disruption of critical industrial gases like helium.
Markets do not understand what they're in for.
She even suggested the ECB may have to reconsider rate hikes if the energy shock proves persistent. This is not just a Middle East story. The countries that will feel this helium crisis the hardest include United States, massive consumer of helium for MRI machines and semiconductor fabs. Domestic production exists, but high-purity helium is heavily imported. Taiwan, South Korea, Japan, the world's leading chip manufacturing hubs. Helium is essential for extreme ultraviolet lithography and cooling processes. China, rapidly expanding semiconductor industry, already facing U.S. export controls and now helium supply risks. Germany, France, UK, Italy. Heavy users for medical imaging and industrial applications. Europe's hospitals and tech firms are highly dependent on Qatari helium. India, growing healthcare and electronics sectors, increasingly vulnerable to global helium shortages. Even a few months of restricted supply could cause delayed chip production, higher prices for electronics, cars, AI hardware, canceled or postponed MRI scans, pressure on healthcare systems, rising costs passed on to consumers, another wave of inflation. For investors, this helium shock adds another layer to the already volatile macro picture. Winners: U.S. energy producers, less dependent on Gulf helium. Gold and Bitcoin, safe haven flows during uncertainty. And companies with diversified or domestic helium sources. Losers, at risk, semiconductor manufacturers, TSMC, Samsung, Intel, medical equipment firms, and any highly leveraged tech or consumer electronics names. Broader effect: higher inflation expectations, potential delay or reversal of rate cuts, pressure on debt-heavy sectors and equities. The Iran war is no longer just about oil. It is now threatening critical industrial gases that power the modern digital economy. Lagarde's warning is loud and clear. Markets are still in denial about the lasting damage this war will cause. Helium disruption is just one example of how fragile global supply chains have become. If you want to stay ahead of these macro shocks, inflation risks, and the next big shifts in capital flows, subscribe to Digital Capitalist and turn on notifications. Drop your thoughts in the comments. How worried are you about helium shortages and chip supply? The biggest market moves rarely start in the headlines. They start in the undercurrents, like this one. See you in the next breakdown. Stay informed, stay positioned.